Hello traders, welcome to Investoo.com's introductory guide to stock indices. In this lesson we're going to learn how to trade or how to day trade stock indices, and we're going to be using just the daily pivots, well, even though we are going to learn how to day trade stock indices, we are actually going to be learning how important pivots are when it comes to stock indices. Now what I'm going to do, I'm going to add the volume indicator and maybe a stochastic indicator to see where we have overbought and oversold zones. Okay, and as you can see, we do have the tick volume indicator at the bottom of the chart, and we also have the stochastic oscillator at the bottom of the chart, and we are looking at the E-mini S&P 500 futures chart on the 50-minute time frame. Okay, now the first thing we are going to do is we're going to look at the pivots. As you can see in black here, maybe we should use a white color for the daily pivot. On white we have the daily pivot, on red we have the daily resistance 1, 2, and 3, and in green we have the daily support 1, 2, and 3. Now, how are we going to trade stock indices with the daily pivots? Well, that's easy. We already know that we need to know where volume is coming from to know where to trade or to know where side of the market to trade. So the first thing we're going to do is we're going to look at the location of price. And as you can see right here, we are above the daily pivot. And this is the pre-market action. Well, this is not the pre-market action actually. Well, this is just a choppy range before we broke down. But in any case, we are trading above the daily pivot. All right, I'm going to get rid of this rectangle because I want to show you what happens here. You can see that the daily pivot and the daily resistance 1 are very close together, and this is a very nice 5.5 point range. 22. So that's about 22 ticks. Or that's exactly 22 tick range in the E-mini S&P 500 between the daily resistance 1 and the daily pivot. Okay, and if you're trading with one lot, you can well, if you remember the past lessons on this introductory guide, one tick equals to $12.50 trading one lot on the E-mini S&P 500. But in any case, what are we going to do? You already know that if we are trading above the daily pivot, then we have some kind of a bullish bias on the day. If we're trading below, we have a bearish bias on the day. This means that if we're trading above, we're going to look for buy opportunities. If we are trading below, we are going to look for sell opportunities. And you can also be looking to trade mean reversals. That means that if we are trading above the daily pivot, you could trade or look for a short opportunity around the daily resistance 2 or the daily resistance 3 rejection. And if you are trading below the daily pivot, you can look for long opportunities at rejections of the daily support 2 or the daily support 3. We like to trade with the bias of the day. That means that we like to trade short when we break below the daily pivot, or trade long when we go above the daily pivot, and that's it. So in this case, we started with a bullish bias. Okay, that means that we are going to look for long opportunities, and as you can see, this range gives none. Then what are we going to do? Well, that's easy. We are going to look for breaks. All right, now let me just change the color on this trend line so you can see it better from your screens. Okay, maybe make it a little thicker and use a magenta. All right, so what are we going to be doing? Well, you're going to look for chart formations. That means that you are looking for triangles, you are looking for wedges, you are looking for flags, you are looking for head and shoulders or inverted head and shoulders at the pivot levels. That's the first step. And as you can see right here, we have a triangle formation. Okay, so what's the second step on the triangle formation? Well, that's easy. We need a breakout. That means that we need a break above, well, we need a break below the daily pivot, a break below the triangle, and a break below the previous low for us to have confirmation of a move down. Remember, we are trading around the daily pivot, so we have no bias right now. But if we break above the daily pivot, above the previous high, then we are going to go long, because that would be a break of the triangle above the daily pivot. But if we break below, or if we break with the triangle's resistance, that would mean that we would have broken with the daily pivot 2, and we need to break with the previous low, as you already know, to have confirmation of a move down. All right, so I just zoomed in a little bit, and we are going to be placing a sell stop order right here. And of course, we are going to be placing a buy stop order around, well, this level. All right. Whatever gets triggered first, that is our trade. Remember, you don't know where the market is going to be going, so you have no idea if you are going long or are going short. You are looking for a breakout. And remember that breakouts happen when volume spikes, and as you can see right here, let me just add a nice arrow up. As you can see right here, we have a spike in negative volume. The sell volume spikes, and when the sell volume starts to spike around this level, see, you can see that we have zero volume. Let's just move this a little bit. We have zero volume, and then we have a spike in red volume. That should give you an idea on where price is going to go. And then the sell volume continues to spike, and we are already in the trade, or no, we are not in the trade actually, because when the volume starts to spike, we did not get filled. We got filled right here at this red volume spike, and then we continue to move to the downside. Okay, so basically these are the steps. 1, you're going to look for the bias. 2, you're going to look for chart formations. 3, you're going to put your stops, buy or sell, above or below the chart formation. Remember that if you are trading above the daily pivot, you're looking for buy opportunities. Below, we are looking for sell opportunities. Then you're going to wait for price to fill you on your orders, and when you get filled on one order, you are going to delete the other order. And then where are you going to take profit? That's easy, at the next available pivot. And that's how you day trade stock indices. All right. And in this case, you made approximately 7 points, which means that you made 28 ticks on the E-mini S&P 500. Where are your stops going to be? Above the previous high. Remember that if we break below and then you break above and break with the previous high and the daily pivot, then our short idea is no longer valid, and you must exit your trade on a loss. But in this case, we did manage to win the trade, and we are going to continue to do the same with the other stock indices, such as the Nasdaq, the Nikkei, the FTSE, and you are going to continue to look for those opportunities or those breakouts out of those out of those pivot levels and out of those chart formations.